With my AXA Mansard Money Market Fund account, I can do transactions fast and earn on the go. And if I want to invest with other portfolios, I do not have to leave my AXA Mansard platform. They offer me a one-stop shop that gives me a wide range of investment options. That's why I'm called my investment now.
Transact, earn, go with AXA Mansard Investments. Visit www.axamansard.com/investments or dial *987*2# to get started today.
With my AXA Mansard Money Market Fund account, I can do transactions fast and earn on the go. And if I want to invest with other portfolios, I do not have to leave my AXA Mansard platform. They offer me a one-stop shop that gives me a wide range of investment options. That's why I'm called my investment now.
Transact, earn, go with AXA Mansard Investments. Visit www.axamansard.com/investments or dial *987*2# to get started today.
With my AXA Mansard Money Market Fund account, I can do transactions fast and earn on the go. And if I want to invest with other portfolios, I do not have to leave my AXA Mansard platform. They offer me a one-stop shop that gives me a wide range of investment options. That's why I'm called my investment now.
Transact, earn, go with AXA Mansard Investments. Visit www.axamansard.com/investments or dial *987*2# to get started today.
Good afternoon, everyone, and welcome. Shason Joseph, can you kindly confirm if you can hear and see me?
I can hear you. I can see you.
Fantastic.
You can put your presentation on slide mode, though.
Okay. No problem. Okay. All right. Thank you, everyone. Thank you for joining us. Trust everyone is having a great day. So it's 3 minutes past 12, and we have quite a number of people on the call already. That makes sense. Okay, thank you, everyone. You can invite your friends and as many people as you think will benefit from this webinar. Thank you, everybody, for joining. I see a great number of people, and that's fantastic. So today, I think we'll just jump right into it. The topic is already obvious. We're talking about the new tax laws, how it affects us as individuals, as businesses. I think every single person on this call will be able to take home one thing or the other. We want to indulge you to first of all get great internet connection ready, so that you can get every single benefit from this call as much as possible, because the person that we have on the call has a wealth of knowledge to share with us. So make sure your internet is good. Also ensure that your camera is off, your video is off. I think that's the case for all of us at this point, apart from myself, the presenter. But if it's different on your end, please make those changes so that we're not distracted. Everybody is able to focus. Should you have questions, we'll take questions at the end. But if you have questions and you're taking note of those questions while the presentation is going on, please feel free to put them in the Q&A or in the chat section as the presentation is going on, so that we can take them at the end of the presentation. So just to jump right into it so that you are assured of a great time packed with knowledge. Let me introduce to you Mrs. Adeshewa Eyitayo, our guest speaker for today. She's a highly experienced tax professional, so you know she's coming to drop great knowledge, useful information. She's a highly experienced tax professional of about 25 years. She has extensive experience in tax advisory, tax compliance, revenue administration, and she heads the tax services team at Kehinde Kasim and Code Chartered Accountants. So she is highly qualified and she will be taking us for the next few minutes or for the next few moments on what the tax reset means for every one of us this year. So, Mrs. Eyitayo, are you on the call?
Yes, good morning, good afternoon, everyone.
Okay. All right. I believe I can hear you. Can you hear me, please?
Yes, I can.
Okay. Fantastic. So, you can go ahead.
Okay, good afternoon, everyone. Hello.
Yes, ma'am, we can hear you. We can hear you. Please
Okay.
go ahead.
Okay, good afternoon, everyone. My name still remains Eyitayo Adeshewa, the head of service of tax service at Triple K and Associates, a firm of chartered accountants. We specialize majorly in tax service, auditing and assurance, and IT information. So quickly, today we'll be going through the Nigerian Tax Reform Act and the implication for business. So as we are all aware, the act came into effect into force in June 2025, and the implementation date for the commencement of the act is 1st of January 2026. So majorly, there are a lot of amendments, significant amendments to the new tax reform bill. And specifically, we'll be going through the Nigerian Tax Act, which is the principal act itself, and the Nigerian Tax Administration Act that talks about the administration of the Nigerian tax law. We have 4 bills: the Nigerian Tax Act, the Administration Act, the Nigerian Revenue Service Act, and the Joint Establishment Act. But today we'll be looking at the principal act itself and the Administration Act. So you can move on. Go to the next slide, please. So this is the previous one, please. So this is the overview of the chapter that we'll be going through today. We are going to do an overview of the Nigerian Tax Reform Act. We'll take us through the taxation of income for both company and individuals, relief for double taxation, taxation of deductible instruments, the value-added tax, the surcharge, the tax incentive that is available, and general provision. Then lastly, we'll move to the Nigerian Tax Administration Act. So that is the overview of the chapter. So the effective date for the new Nigerian tax bill is 1st of January 2026. And this bill actually repealed more than dozens outdated tax status. Before now, we have the Personal Income Tax Act, we have the Company Income Tax, we have the value-added tax as different acts. But now, this new reform bill has unified the personal income tax, the corporate tax, the VAT, capital gains, and stamp duties into a singular act so that it will be easy for taxpayers or individuals to go through it. So like I said, we'll be looking at the Nigerian Tax Act itself and the Nigerian Tax Administration. The Joint Revenue Tax and the Nigerian Revenue will not be looking at that in this training. So you can move on. Okay, so Section 6 of the Nigerian Tax Act empowers the Nigerian Revenue Service to treat revenue reasonable portion of the profits of a foreign company that is being controlled by a Nigerian company as profit. What does that mean? Nigeria companies are taxed on their worldwide income. So that is any income that is being derived in Nigeria, that accrues in Nigeria, that is brought into Nigeria, that is received anywhere all over the world. Once a company is resident in Nigeria, all those forms of income, the profit on it will be subject to tax in Nigeria. So now the law is saying, is a new provision of the law that says that if a Nigerian company, a resident company, has a foreign entity, so the law gives NRS, that is Nigeria Revenue Service, empowers them the right to subject a portion or a proportion of the profits of that foreign company to tax in Nigeria, irrespective of where that company is. Once that foreign company is being controlled by a Nigerian company, the law empowers NRS to treat a portion of their profits as subject to tax in Nigeria. Also, where the income of a non-resident company that is a subsidiary of a Nigerian company or is a member of a national company of a multinational group of a Nigerian company, in any year where the income of that profit yield tax that is less than the minimum effective tax rate, the Nigerian parent company shall pay an amount that makes the non-resident subsidiary income tax equal to the minimum. So in essence, let me put this in perspective. For example, if a Nigerian company, resident company, has a foreign entity, for example, let's say it's resident in UK, if the tax that is paid by that UK company is less than the minimum effective tax rate, which is 15% of the profits of the company, then the Nigerian company, that is the resident, the parent company of that foreign company, will have to pay like a top-up tax to make it, to bring that foreign company into part with what will be paid in Nigeria, that is the minimum effective tax rate. I believe that is clear. Then, in line with Section 10, the Nigeria Revenue Service is empowered to treat profits of small business that is controlled by no more than 5 individuals as deemed distributed in Nigeria. So in essence, for small business that has shareholders that are no more than 5, if in any year of assessment they fail to distribute their profit as dividend, NRS can treat that undistributed profit as distributed. So the implication is that, number one, that deemed dividend will be subject to withholding tax in the hands of the shareholders. Then in computing corporate tax for that company, the dividend will be taken as a total profit in case where the taxable profit is lower than the dividend paid. So that is the implication for, but however, a company can object to this because at the end of the day, the Nigerian Revenue Service has the right, that's the obligation to write to the relevant taxpayer if they actually want to go through this route. And the relevant taxpayer can object to this assessment if you can prove to them that you have a reason why you cannot distribute profits appropriately. Then taxation of non-resident company, line with Section 17 of the Nigerian Tax Act. Any income, profit, or gain of non-resident company that is accrued in Nigeria or derived from Nigeria are chargeable to tax in Nigeria. Most of the time, these taxes are final tax, that is withholding tax on that income will be deemed as final tax unless that non-resident company has a permanent establishment or significant economic presence in Nigeria. Then moving on, now we have the allowable deduction has not changed. Yes, in line with Section 20 now, but the only changes to this provision of the law is that in the repealed law, for an expense to be deductible, it must satisfy the when criteria. That is, it must be wholly, it must be reasonable, it must be exclusively and necessarily incurred for that business. But now, in line with this new act, once an expenses is wholly and exclusively incurred for a business, it will be allowed for tax. So in essence, the pre-operational expenses will now be allowed for tax. Any bad and doubtful debt will be allowed for tax, except it is between related parties. between related party. However, if there's any VAT expenses, that is not subject to VAT, any VATable expense that is not subject to VAT, such expense will not be allowed for tax going forward. So let me put this in. If you get an invoice, maybe from the small business or from vendors, normally that service is a VATable service. Maybe for one reason or the other, the vendors refuse to or fail to charge VAT on that service. You as a company, you need to self-account for that VAT and pay over to FRS. If FRS come around, maybe for test examination or for tax audit, and they find out that some of these expenses that you have incurred does not have VAT or VAT is not charged on them, then such expense will not be allowed for tax. The same way, if you purchase an asset and there's no VAT on it, it will not be allowed for tax if those assets are VATable items. So we need to take cognizance of that. Then again, foreign expense going forward must be translated using CBN rates. No more black market rate. You must use the CBN rates to translate your foreign exchange transactions appropriately. So let's move on.
Are you there, ma'am?
Let's
The
move
slide
on,
has
please.
moved.
Okay, it's fine. So the non-allowable deduction has not changed. Payment recovered from insurance indemnity is not allowed for tax. Payment to unapproved pension is not still allowed. Payment to widows and orphans that are not approved, they are not allowed. Unrealized exchange gain or losses that are not approved for tax. Expenses incurred to generate tax exempt income. So now we find that now we have a few income that's still not subject to tax in Nigeria. Example is federal government bond, state bond, they're still not taxable. Still not taxable. So any expense that is incurred in generating this form of expense of income will not be allowed for tax. So that is why expenses that is incurred to generate tax exempt income, they are not allowed for tax. Penalties and fines are still not allowed for tax. Like I said the other time, non-VAT deductible expenses, they will not be allowed for tax. So we need to take cognizance of all those non-deductible expenses. Move on. Can you move on to the next slide, please? Therefore, capital allowance, the rules to capital allowance has changed. Before you can claim capital allowance on your assessable profit, you must restrict to 2/3 of the assessable profit. But that has been repeated. There's no more restriction to the claim of capital allowance. However, if you must apportion your capital allowance, your qualifying capital expenditure based on your usage, then another thing is that if you have an income, a taxable income, if your non-taxable income is more than 10% of your total income, the capital allowance will be prorated appropriately. If your non-taxable income is more than 10% of your total income in the year, your capital allowance will be prorated appropriately. So now we move on to the basis of computing personal income tax. There's no more consolidated relief allowance, but rather we have the rent allowance. Interest on loan to develop residential houses are still allowable deduction. Your NHF, your NHIS, your pension and your life insurance premium, you can still claim them as relief when you are putting your taxes, your personal income tax. Your NHIS, your NHF, your pension, your life insurance policy. That is very important. You can claim your life insurance policy and premium as a relief against your total income for the purpose of tax. So move on. So The tax rate has not changed. For company income tax, the tax rate is still at 30%. However, for small companies, that is companies whose turnover are no more than 100 million in a tax year, and the fixed assets is not more than 250 million, they are classified as small business. Those kind of companies will not be subject to any form of tax. Small companies are relieved of company income tax and development levy tax. However, before now, we have the small companies, we have the medium companies. For the medium companies, they're subject to tax at 20%. For the large companies, the tax rate is 30%. But now, going forward, in line with the new tax act, we have just the small companies and the large companies. So small companies whose turnover is not more than 100 million are not subject to any form of tax, no company income tax, no development levy. But for the others, any company whose turnover is more than 100 million in any tax year will be subject to tax at 30%, income tax at 30%, and development levy at 4% of the assessable profit. Before now, we normally, the company are normally assessed to tax, they access to company income tax, access to tax, to education tax, which is at 3% of assessable profit, access to NASENI, police trust, information technology. Now, all those other form of taxes has been abolished. So we have development levy of 4%.
Hi, Madam Cheryl, can you hear us? Can you hear us? Okay, I don't think so.
Okay, apologies, a call came in.
Okay. Please
Okay,
go ahead
so
now.
moving forward, minimum tax has been abolished. Minimum tax has been, there's no longer. You cannot hear me. Can you hear me now? Hello?
Yes, ma'am, I
Yes,
can
we can
hear
hear you now.
We can hear you.
Okay.
Please go on.
Okay, thank you. So minimum tax has been abolished. Companies are not subject to minimum tax again. However, for multinational companies whose group turnover is above 750 million euro, that is about 1.6 trillion naira, will be subject to effective minimum tax rate at 15% of their net income. This relates strictly to entities, constituent entities of multinational companies. Once the group turnover is above 750 million euro, multinational companies, all their constituent entities in Nigeria will be must pay tax that is not less than 15% of their net income after adjusting for their frank investment income and unrealized exchange gain. However, for Nigerian companies whose turnover is more than 50 million, this will also apply to them. So if you're a Nigerian company, you're not a multinational company now, but you are a Nigerian company and your turnover is more than 50 billion, you still be subject to this effective minimum tax rule. Then taxation of insurance business, this has not changed. Insurance business that are required to keep separate books for life and non-life, and the life and non-life business will be taxed separately. Life insurance business is also allowed to deduct specific amounts as special reserve from their profit. Then the addition to this section of the law is that there'll be a deduction of withholding tax on payment of premium to non-resident company. That's the only addition to the life insurance, to the insurance business. That has not changed. Please, can you move on? Then now we are moving straight into personal income tax. Now, in line with Section 12 and Section 13 of the Act, the principle of residence has now been more pronounced. So for you to be a resident in a country, you must be domiciled in that country. The issue of significant economic ties is enshrined in the new tax reform bill as well. Then any income that is derived from anywhere whether in Nigeria or outside Nigeria, whether it is brought into Nigeria or received in Nigeria, is subject to tax in the hand of that individual. The current year basis still remains for personal income tax, and the tax rate, the tax band has changed. We can see that there's a little bit of changes to the tax rate for individual and those in employment. So in essence, for those in employment, you'll be charged to tax in Nigeria. And for individuals as well, whether you're in employment or not, you'll be charged to tax in Nigeria based on your employment income. For those in employment, you'll be charged to tax in line with your whatever you have in line with your employment income. If you have investing income, you will be subject to tax based on your investment income. You will be charged to tax on any form of other source of income that you earn. If you have chargeable gains from disposal of chargeable assets, you'll also be subject to tax on that. So for those people in employment now, there's a rule that says that in line with section 13 and 14 of the Nigerian Administration Act, you have the obligation to now file annual return with your relevant tax authorities. Every individual, whether you are in employment or not, you have an obligation to file your annual tax returns with your relevant tax authority latest by March 31st of each year. And what you are filing, even if, because normally if you're in employment, your tax consultant or maybe your company will have filed your annual returns for you based on your employment income. As an individual, you have the obligation now to now file your employment income. If that is the only source of income you earn, no problem, just file it. You have to still file it individually, your employment income. If you have any investing income, you have to include it in your annual returns. If you earn income from other source, you have to include it. If you have chargeable gains, you have to include it and file appropriately with your relevant tax authority. So moving on. So, like I said earlier, there's no more consolidated relief allowance, but rather every individual can claim rent allowance. The rent allowance is 20%, the lower of 20% of the actual rent that the individual has paid, subject to a maximum of 500,000. So if you have made a rent that is more than 3 million, because 20% of 2.5 is 500,000. If any individual have paid a rent that's more than 3 million, that means you will not enjoy all the relief. So it's lower of the actual rent, 20% of the actual rent, capped at 500K per year. The interest on loan to develop your residential house is allowable deduction. Okay, I think we've discussed this. Then this deduction in your taxable in your total income before you arrive at your taxable income must be made in writing in line with the law. You must write to the relevant tax authority to claim this allowable deduction. Then the relevant tax authority has the power to request for documentary evidence, especially for rent. If you have made payment for rent, they will ask for your rent receipt. So please make sure that you have that handy so that anytime they request, you can make it available. Then this is a graduated tax rate now. The first 800,000 is taxed at 0%. So the next 2.2 million is at 15%. Next 9 million is at 18%. The next 30 million is at 21%. The next 25 million of your income, taxable income, is at 23%. And any income that is above 50 million is subject to tax at 25%. So moving on. Then we are now going to taxation of income, that is capital gain tax. Before now, in the old law, capital gain tax is a separate tax, it's subject to 10%, but now that has been increased. The capital gain tax for every business now is now 30%. So anytime you are computing your normal company income tax, whatever chargeable gain you have to include it as subject to tax at 30% for company income tax. For individual, you see subject your gains in line with your normal graduated band rate. So now these are the transactions that are liable to capital gain tax. your digital or virtual asset is liable to capital gain tax when you dispose of it. Your options, your rights, debts and incorporeal property. What if you dispose of shares that's above 150 million during a tax year and the chargeable gain from that disposal does not exceed 10 million, you will not be liable to capital gain tax. But if the disposal of shares is above 150 million and the chargeable gain is above 10 million, you'll be liable to capital gain tax. However, if you dispose of shares and you invest the proceeds of that disposal in another Nigerian shares, it will still be, it will not be liable to capital gain tax. Then for compensation, any compensation that exceeds 50 million will attract capital gain tax. The essence of that amount that exceeds the 50 million will be subject to capital gain tax appropriately. So these are the exempted transactions for capital gain tax purpose. If you dispose of your dwelling house, that is your place of residence, it will be exempt from capital gain tax. However, it has to be once in the lifetime of that. It has to be once in the lifetime of that individual. If you dispose of your personal motor vehicle, subject to a maximum of 2 in any tax year, whatever disposal gain, chargeable gain that you have made from that disposal will not be subject to capital gain tax. If you dispose any asset by way of gifts, it will not be subject to capital gain tax, in as much that that asset is acquired by way of gift. The properties that are held for not profit, if there's a disposal, it will not be subject to capital gain tax. We can move on. So that is that about capital gain tax. Remember, for complaints, your capital gain tax will be included when your chargeable gain will be included as part of your income for the year, and that will be subject to income tax at 30%. It's no longer 10%. But for individual, it's going to form part of your chargeable income for the year, and the appropriate bandwidth will be applied. The development levy is 4% of accessible profit of all complaints. However, small companies are exempted from this development levy. Non-resident companies are also exempted from development levy. I think we spoke into that earlier on. Moving on. Next slide, please. Okay, now, reliefs and double taxation. You know, I said something earlier on that Nigerian companies and individuals, they are liable to tax. They are liable to tax based on their worldwide income. So, for example, let's put it to perspective. If company A has earned, for example, rental income from UK, it's possible that company A that's resident in Nigeria, resident company Nigeria, has a building in UK and it went rental income from UK. Like I said, that income will be subject to tax in Nigeria. However, you agree with me that that rental income would have been subject to property to income tax also while in UK. So now there's a relief in line with the Act. There's a unilateral relief that can be claimed. So whatever tax that you have paid on that income while outside Nigeria will be granted as a relief in Nigeria. So at the end of the day, if your rental income is coming from a country whose tax rate is even more than what is obtainable in Nigeria, that means at the end of the day, you don't have to pay anything. But if you operate in a tax haven, that is a jurisdiction whose tax rate is, whether there's no tax on income or the tax rate is lower than Nigeria, then you have to now pay the balance. So whatever you have paid that you have suffered at tax over there will be taken as a relief, will be considered as a relief in Nigeria. So that's that for relief and double taxation. Therefore, companies that has double tax treaty, that will be applicable. So moving on to stamp duties now. So stamp duties, this is tax or duties on dutiful instruments. It could be in form of tax stamps, it could be electronic, it could be in form of certificate, die, electronic receipts, and any other approvement. So stamp duties majorly is on transaction, on dutiful transactions that you carry out. Number one, if you look at the stamp duties, you have a list of those items that will be subject to stamp duties. We have your investment properties, we have your mortgage, we have your contract note for shares transactions, we have your normal contract agreement with maybe clients, customers, and all that. We have stamp duties on rent, we have on insurance policy as well. Then we have on bonds and all that. So the weight differs. Our advice that you go to this 11th schedule of the Act, you will see all the instruments that are subject to stamp duty. So that, but however, for contract and agreement, because most of the time you see that the relevant tax authority will come around and they want to subject us contract and agreement to stamp duties at 1%. That is wrong. What the law says is that for contract and agreement that is not specifically charged to stamp duties, it will only be subject to stamp duties at 1,000 naira. It is a fixed rate. It's 1,000 for contract and agreement that is just evidencing that the company has business transaction between each other. It's 1,000. And however, even before you can charge that 1,000, the sum in question must be above 1 million before such transaction can be subject to stamp duties. However, your investment property, I would advise anybody that has investment property, please, you need to perfect your document and stamp it, because any unstamped document will not be admissible in the court of law. So we need to take note of that. So that is all about stamp duties. And then moving on to value-added tax now. Next slide, please. So moving on to the audio is low.
Are you there, ma'am? Can you hear me?
Can you confirm that you can hear me? Somebody said the audio is low.
We can
you hear
hear
me
you.
perfectly? Okay. So moving on to value-added tax now. So now, okay. So there is an amendment to the value-added tax. Number one critical amendment is that before now in the old tax law, tax is due only when payment is made for service rendered. Tax will be due. Normally, tax is due, VAT is due when payment is made. That is when you receive payment for the service or the goods that you sold, that is when you are liable to make payment for VAT, to remit VAT to FRS. However, in line with the new Nigerian tax, that has changed. So now, your VAT will be due at the earliest of when you invoice, when payment is made.
Hi, Madam Shaw, can you hear us?
As apologies, a call came in.
Okay, please go on, ma'am.
Okay, so I said earlier on in the repealed act, obligation to remit VAT to FRS is on receipt of payment, which is logical and reasonable as far as I'm concerned. It's when you have received payment for the goods or the service that you have rendered, that is when you have the obligation to remit VAT to FRS. However, in line with this Nigerian Tax Act, that has changed. Once you have issued your invoice, you are liable to pay VAT, remit VAT to FRS, irrespective of whether you have received your fee or not. So you find out that at times that means company will have to bear VAT liability, even at the point when they still have receivables. For me, that is not reasonable, it's not fair, but that is in line with the law now. So we need to take note of that. VAT now is on invoice basis. It's no longer on cash basis. Somebody is saying that I should increase the volume. Is it that people cannot hear me? In fact, I'm actually using the maximum volume.
From my end, the audio seems good, but I don't know if you can check.
I've checked. It's actually, the volume is okay. Okay. Thank you so much. Thanks for that. Okay. Okay, so we need business owners, please, we need to take note of that. VAT is now on invoice base. Once you have raised your invoice, the obligation to remit VAT to FRS is immediate, even if you have not received payment for the service you have rendered or payment for the good that has been sold. So that is that for VAT. We need to, okay, so that is that for VAT. That is the only amendment to the VAT Act. So now, VAT rate is still maintained at 7.5%. However, just like I said, for small business are not liable to company income tax. Same way for VAT. Small business are relieved from obligation to even register for VAT. If you're a small business, if you have not reached the threshold of 100 million, unless you know that, okay, because the kind of business you are doing, you are going to reach that threshold, then you can register voluntarily. It is voluntary registration for small business. If your threshold for you have not reached the 100 million, you don't have the obligation to register with FRS for VAT. You don't have the obligation to file your returns until you have reached that threshold of 100 million. But however, like I said, if you know that the kind of business you do, you know that at the end of the year, everybody is paying for growth in business, you know that you're going to cross that threshold, then you can voluntarily register with FRS for VAT. You can file your returns. But if you know that maybe you just want to wait, the obligation to register for VAT, 100 million, yes, 100 million naira. So any small business are business whose turnover is not more than 100 million in a tax year. So if you're a small business, your turnover is not going to be more than 100 million in a tax year, you don't have the obligation to register with FI. You don't have the obligation to file with us. You don't have the obligation to collect VAT. You cannot include VAT on your invoice because you're a small business. The tax law has relieved you of all those obligations until you hit that threshold, until you cross the threshold of 100 million. That is when you have the obligation to now register with FRS, file returns, and collect VAT for remittance. So I hope that is clear. So VAT is applicable at the point, no, go back to the previous slide. VAT is applicable at the point of import or untaxable supply. That has not changed. When you are importing your goods, at the point of import, custom service, you pay your VAT. VAT is due on non-resident complaints that makes vatable supplies. So let me reiterate, VAT is due on non-resident complaints that makes taxable supplies. So we can see that a lot of, it's not a global village. You can see that businesses are doing transactions across the globe. So it's possible that a company that is resident in Nigeria is having business transaction with a company that is resident in UK. A company in UK is rendering service to you in Nigeria. So when such issue arises, you'll find out that when you receive invoice from all the other jurisdiction, they will not include VAT on in your invoice. So as a Nigerian resident, because you're a vatable person, you have the obligation to self-account. You have the obligation to self-account for that VAT that is not included in your invoice. Now, let me reiterate. If you are having any business with a non-resident company, that is companies that are not resident in Nigeria, foreign companies, when those non-resident companies are issuing invoice to you, you will find out that there will not be VAT. They will not include VAT in their invoice. You will not, as a person, as a company in Nigeria that received the invoice, you have to now account for that. You have to account for the VAT. That is the self-accounting. You will not be the one that will not calculate the VAT as if you are getting that service from a Nigerian company. If that service is being provided by a Nigerian company, that Nigerian company will have input the VAT on that invoice. So the same way, you will not self-account for it. Okay, maybe you have received an invoice for 1 million, for example, you just do 7.5% of 1 million and you remit to FRS appropriately. So you will be the one that will self-account for your VAT. You are not paying to the non-resident company. So you have to do that, because by the time FRS comes for audits, these are the little things that they check for, and you may be liable to huge tax liability if you refuse to self-account for it. So move on the same self-accounting is not for non-resident companies alone. Like I said, small business too are relieved from VAT obligation. So it's possible that you are not even transacting business with non-existent company. You are transacting business with Nigerian company that's a small business. That small business has given you an invoice because that small business is relieved of obligation of charging VAT. As a company, because you are not relieved of the obligation. Let me explain, because a lot of people still comes to me back to us to tell us that, but small business are not liable. They don't charge us VAT. Why do you have to serve accounts for it? VAT is on consumption of good and service. You as a company, because you're a large company, you are a vatable person. You are still under obligation to pay VAT. You will agree with me that all this business, even you as a person, you are just an agent of collection for VAT. You are not the one that's bearing VAT liability. So you are just an agent. Those small companies are just agents of collection. They will add the VAT to your invoice because you are the consumer, and you'll be the one that will pay to them. Their own obligation is just to remit to FRS. Now, FRS of the government, the law has relieved them from that obligation of serving as agents of collection. But you as a person, as a large company, you are still a vatable person. So when you get invoice from all these small business, your computer village guys, your vendors, all those your artisans, they will come, they will not give you invoice because they have small business, there will not be VAT on their invoice. You as a person, because you're a vatable person, your income in a year is more than 100 million, you're not a small business, you have the obligation to self-account for such service too and remit to FRS appropriately. Please, this is fact. When audit comes, these are areas that FRS look straight into, and companies can see that companies are always liable to tax liability for self-accounting of VAT. So we need to take note of that. Then there's requirements for detailed sequential invoicing requirements for every invoices. The due date for VAT remittance still remains. It's still 21st of the following month after the month of deduction. Therefore, but for those in banking, for those in telecommunication and oil and gas, the due date for remittance is still 14th date of the following month, because those ones, because of people, guys, if in case people want to claim input VAT. Then input VAT cannot be claimed of fixed asset that's directly used in the course of business. You cannot claim input VAT on any asset that you purchase for use in your business. And also for those that provide service, for business that provide service, you cannot claim input VAT in line with this NOPO Act. You cannot claim input VAT. However, the input VAT that you claim must be utilized within 5 years. If it's not utilized within 5 years, it should be lost. So you need to take note of that. So moving on. Next slide, please. Let me see. Hello.
I'm already on the website. I'm already on the next slide, sir.
No, I can't say it. Okay, so for surcharge, please move on. You don't. It does not concern. It's been on hold. This surcharge and levies on hold. Move to the next slide, please.
So I'm on the tax incentive slide now.
It's not showing for my head. Okay, thank you. So in line with section 166 of the Act, the following companies and sectors are still exempted from tax. It has not changed. It's still in line with the old Tax Act. The statutory or friendly society, cooperative society, educational, religious, charitable organization, trade union, government and parastatals, dividend of authorized investment scheme, dividend and rental income of REIT, income from state and federal bond, companies that engage in agricultural business subject to maximum of 5 years are still exempt from tax. Dividend, rent, and interest that is obtained from outside Nigeria and brought into government approved channel is still exempt from tax. Move on to the next page, please. This has not really changed. All the tax incentives are still there. Next slide, please. Then now, so we have the following tax incentives for VAT. So the following are exempt from VAT. So when we move back to the VAT exempt. Move on to the VAT exempt. So let me explain the difference between exempt item for VAT and zero rated. So for exempt item, that means the company that's providing that service or good does not have obligation to charge VAT on their invoice. Those are the ones that are exempt from VAT. So we still have the oil and gas export has not changed. Shared road transportation, purchase and lease of agricultural equipment, land and building does not change. Good purchase for humanitarian and donor, supply consumed by export processing zone, security and interest in government license, baby products, school tuition, all those ones are still VAT exempt. That is, if any business provide this service, you don't have any obligation to VAT that service or include VAT in the invoice when you are issuing invoice. Okay, somebody said I should expand on the land and building option. So now for land and building, land is exempt from VAT. And so since land is exempt from VAT, any structure on that land is also exempt. That is why you see that when you make a sale, when you sell land, it is exempt from VAT. When you sell building, because building is on land, so it means that anything that is affixed to that land is also exempt from VAT. So when you sell building or you sell land, it is exempt from VAT. You will not charge VAT on it. Because it is building that is being rented out as well. That is the reason why rent too is exempt from VAT. So majorly rent, because you are leasing out your building, is exempt from VAT. The building itself on that land is exempt from VAT. The land itself is exempt from VAT. However, if there's a construction, okay, let me just go on. Okay, let me just finish this explanation so that we will not take it away since I've started. So for building, for land, for lease, that is rent, is not VATable. You don't include the VAT on your invoice. However, like I was saying, if it is construction, that is still VATable. Why? Because you are constructing a building, although that building is VAT exempt, but you agree with me that you will still go to the market to buy things for that construction. All those items that you are buying, they are VATable items. So that is why construction itself is still a VATable item. However, when you are making sales of those buildings, maybe you are finished, you are done with construction, and you want to sell the building. For those people in real estate, you want to sell your building or you want to rent it out, is still not subject to VAT. So I hope that is clear. So you can move on. So, like I was saying, that's different between, so for zero rated, so now, like I said, for exempt item, you do not have obligation to include VAT on their invoice. But now for zero rated, so for if you are into VAT exempt item, you are relieved of obligation of charging VAT because you are exempt from VAT. But for zero rated, you will not charge VAT, you will also not pay VAT. You will not charge, you are relieved from both. So there's nothing like input VAT, there's nothing like output VAT. Output VAT is for VAT on your sales. Output VAT relates to VAT on your sales or your income. That is output VAT. The input VAT is on your purchase. Most of the time, when you have made a purchase and you have suffered VAT on it, you can claim that input VAT and net it off from your output VAT. So it's the remaining one that you pay over to FRS. But for zero rated, in as much as you cannot charge people VAT, you cannot also be subject to VAT. People cannot charge you VAT again as well, because the service or the goods and services you render is zero rated. However, the law says that if you are zero rated, you will still be subject to, you still pay the VAT, but you can claim a refund after. So these are the incentives. These are the items that are exempt for, that are zero rated. Your basic food item is zero rated. Locally made medical and pharmaceutical products, generally, they are zero rated now. Tuition fee is zero rated. Exported goods, they are zero rated. Livestock, agricultural, all those items, they are still zero rated. It has not changed. Electricity is now zero rated. Medical service is zero rated. Electrical vehicle, their parts and units are zero rated. So moving on. So this is the general provision. That's the general provision in line with the Act. You treat business acquisition of the same line of business as continuing. That is, if you acquire a business and you continue in that line of business, you are not liable to file cessation accounts with FRS. So you treat it as continuing business. Treatment of refund. Treatment of refund, rebate, discount, and similar transaction will be treated as income. I believe that normally when you have this kind of rebate, refund, you will have treated it appropriately when you are doing the accounting part of it. Then capital allowance now. Majorly now, because before now, we can see that most of those capital allowance rates, we have the annual rates and initial rates. There's no longer initial rates. It is only, the company can only claim annual allowance for the purpose of capital allowance now. And majority of the annual allowance are now at 20%. However, when you are fully claim all the capital allowance and the asset is still in your books, you have not disposed of it, you will claim 1% of the cost of assets as a residual value and does not affect your capital allowance computation. Like I said, the 2/3 rule is no longer applicable. You can claim all your capital allowance. There's no restriction in them. So that is that for the Nigeria Tax Act. So that is all we need to know. Yeah, so now we are moving on to the Nigerian Tax Administration. And like I said, that is the act that talks about the administration. In this Nigerian Tax Administration, you'll be seeing more of the penalty regime, the interest and penalty regime, filing of returns and all that. That is what this Nigerian Tax Administration speaks to. So now, in line with Section 8, tax ID is required to be stated on all official documents. It's not a new provision, it has already been there. The law is just enforcing it, and we are enforcing that on all official documents, the company's tax ID must be on all official companies. Companies in banking, insurance, stockbroking, or other financial service business in Nigeria, they are to ensure that every taxable person provide a tax ID. That is why we've been seeing a lot of, lot of rumors, a lot of information has been going on that no, you cannot operate your bank account without a tax ID. And now it is good now that the Nigerian Tax Board, they've come out, you can use your NIN to generate your Joint Tax Board tax ID, which is very easy now. So if your business is into banking, insurance, stockbroking, or any other financial service, before you can open an account for any person, you must obtain that tax ID. That is very important. Then taxpayers are to notify the tax authority within 30 days of any change in the taxpayers' particulars. That is the date that it is. If there's a change in your details, maybe your information, your email, your address, you must inform FIS within 30 days. If not, there's penalty for that. Taxpayers are under obligation to notify the taxpayer, the tax authority, of any of their cessation. If a company ceased to operate, you must inform the relevant tax authority within 30 days from your proposed date of cessation. That is very important as well. There's penalty for that as well. Moving on. Then now, self-assessment returns for individuals. Self-assessment returns for individuals remains obligatory, including those people that are exempt from tax. So it's not a new provision of the tax law. We just that there's enforcement now. I've gotten at least 2 letters from some of my clients. LIS have written to them that they should come and declare their annual return, despite the fact that the company has declared the annual return by the end of the January. So now every individual now, like I said, whether you're in employment or not, you still have the obligation to file with your relevant tax authority. You declare your employment income. If you have any other source of income, you declare it. It is now obligatory. Please, you need to note that. 31st of January means the due date for filing annual payee returns. The taxation of low-income earner. The relevant tax authority are empowered to design a framework for simplified payee system for low-income earners and those in the informal sector. They've not issued a policy statement. I believe that will be issued as soon as policy. For the low-income earners, the relevant authority will come up with their policy statement and they can design a simplified payee scheme for low-income earners. Moving on. So electronic fiscal system. This is for large taxpayer. Now I know it's not now, at least as it is now. Deployment and enforcement of electronic fiscal system by the service for the recording and transmission of transactions. This is actually enforced now. The large taxpayer, that is companies whose turnover is above 5 billion, and their tax office is at large tax office. They've kicked that study. It is called electronic fiscal system. Maybe you must have heard about it, e-invoicing. So what it entails is that anytime you are doing any transaction now, whatever you are doing real time, as you are sending your invoice, as you are getting invoice from your vendors, FRS is seeing it live, real time. So gone are the days where company will manipulate the account, they will declare a turnover that is not in line with the transaction for the year. Now, FIS will see your transactions real time. So the good thing about this is that it even makes tax audits to be seamless for me. In fact, if this kickstart, if this is extended to all the taxpayers, you'll find out that there is even no need for audits, because within the confine of the office, they can determine your turnover, your cost of sales, determine your profit and the tax liability. So this is actually enforced. It is called e-invoicing. The large taxpayers, they've kickstarted it, and I believe that it will get to the smaller tax office as well. Moving on. Then quarterly returns of customers. This is very important. Every bank now, insurance companies, stockbroking firms, or any other financial institution are to render quarterly return. Annual return is not annual return. Annual return of new customers and existing customers with cumulative transaction of 50 million for individuals and 250 million for companies. So now, in essence, every financial institution, whether you're a bank, insurance company, stockbroking, you are to render annual returns with the relevant tax authority. And what are you rendering? Any customer, whether new or existing, that has cumulative transaction of 50 million in a month for individual and 250 million in a month for corporate entities, you must render, setting the name of the individual, the address, all the details. You must do that returns and share with the relevant tax authority, whether FRS or the state NRN. So the implication is that for those people that has other income and have not declared, these are ways whereby the relevant tax authority can get hold of people. Once they have shared your details with them, it's easy for them to come after you, especially if you're a high income earner. So we need to take note of that. That this is more like a data gathering system. So 31st of March. So accreditation of tax representative will be accredited by the relevant tax authority going forward. Please, previous slide, please. Then best of judgment assessment. The relevant tax authority can carry out best of judgment assessment or additional assessment. If they find out that maybe, for example, if you have not filed your returns, they have the right to issue a best of judgment. So I will advise clients, please compliance is the word now. That's the key. Make sure you comply with all your filing needs. Make sure you file your returns as and when due. The penalty for non-filing now is very huge on tax month, and that has taken effect from this month. So please, if you have refused to file when you are supposed to have filed, the relevant tax authority can invoke the provision of that law and raise best of judgment assessment for you. However, if maybe you have filed and they found out that you have not filed what you should have filed, they can raise additional assessments appropriately as well. So that's that for best of judgments. If I move on. So this is for disputes. You know, at times, FRS or the relevant tax authority will raise an assessment you want to object. At times, after objecting, they issue with NORA, that is non-refusal to amend assessment. As a taxpayer, you have the right to take the tax authority to the court, the High Court. So now the rules is that if you are taking the relevant tax authority to court, you must pay 20% of the disputed amount. So not the undisputed. You know your own amount is the undisputed, but the disputed. If FIs are giving you a liability of 1 billion now, you know the way they do. At times they will just come up with very bogus assessment. They will give you 2 billion liability. If you want to contest that in the court of law, you must pay 20% of that disputed amount before hearing can be done. Before it was 50%, so it has reduced to 20%. So you need to take note of that before you take any tax authority to the court. The returns cannot be invalidated due to error while filing. Then empowerment of relevant tax authority to effect arm's length principle on transaction. So if you have carried out for related party transactions within the group, if FIs have the right to treat whatever transactions that you have carried out within yourself if it is not in line with the arm's length principle. So they can do all those adjustments and assess it to further tax if need be. Now, relevant tax authority can now exchange information and conduct joint audits with another relevant tax. So we will see now that going forward, don't be surprised when you see a letter from FRS and you see the same letter from LRS. They can now come together to do joint audits in your office. So we need to be aware of that. Another thing is that there's exchange of information between taxpayers now, between tax authorities now. FRS can give your account, audited account to LRS. LRS can supply the list of your staff that you have declared and the salary that you have declared. They can supply it to FRS to compare with what you have in the audited account. And we have seen a lot of time now, even we've seen cases where there's something, the F5 for FRS, we have the automatic exchange of information. And Nigeria is part of the OECD. So we've seen lots of cases from our clients where they write to them and we find that other countries, other jurisdictions have shared relevant information, financial information with Nigeria. And at the end of the day, you know how to come. If the company has declared all those income, no issue. But if not, so now the way it is, a lot of people were like, are you sure Nigeria has that data gathering system? They have it. Nigeria is a member of OECD, and we have signed into the Common Reporting Standard, whereby other tax jurisdictions can share relevant information with Nigeria. So we need to be aware of that. Moving on. So for withholding tax now, withholding tax on dividend, interest, rent, royalty, director's fees, payment to entertainment represent the final tax. It has not changed. The taxation of non-resident company that provide technical, consulting, professional, or management service to any company will be liable to withholding tax. And the withholding tax from the non-resident company is final tax for them. We've seen a lot of time that companies will pay their non-resident company without withholding tax. Please, going forward, in line with the withholding tax regulation 2024, please, you must withhold tax. Anytime you are making any payment, whether technical fee, consulting, professional fee, to your non-resident company, to any non-resident company, please ensure that you withhold tax, or else you will be the one that will bear it by the time the relevant tax authorities come for review. The enforcement of withholding tax regulation is in line with the guidance for the regulation, which is in line with the regulation 2024 withholding tax regulation. Moving on. Tax refund. So now taxpayers can get refund from excess tax paid within 90 days, especially for those people that has withholding tax, huge withholding tax credit note that they have not utilized, but subject to tax audit. Once tax audit has been carried out, a special tax audit will come to your company, you carry out a special tax audit. Once it can be determined that you still have excess withholding tax credit notes, then you can get a refund within 90 days, and it must be through application. The relevant tax authority can destroy goods, security, land, or premises, and other possession of taxpayer in case of non-payment of tax, especially tax that has become final and conclusive. Then the relevant tax authority can seek assistance of law enforcement agency in carrying out its function. We have been seeing a lot of this. You see FCC coming together with FRS to enforce payment and all that. So they can seek the assistance of the law enforcement agents in carrying out their function. Moving on. Now we are moving on to the penalty and interest. There's a 10% penalty and interest compounded at CBN rates applies to all unpaid taxes. It's not a new provision, it's still in line with the old provision. If you have any unpaid taxes, you'll be subject to 10% penalty and interest at CBN rate. However, for FRS, their interest is compounding. For LRS, their interest is a straightforward, but we don't know, they might decide to compound interest as well in line with this Nigerian Tax Act. So that is why we've been advising clients that please ensure that you comply, just comply, because the interest and penalty regime is killing. I will not lie to you. Interest is being compounded on tax payments. Once you have failed to settle your tax, the interest will continue to run on a daily basis until the time of settlement. Please comply. So relevant tax authority can now verify information supplied by taxpayer through other entities and agencies. That is, I told you, automatic exchange of information. The relevant tax authority can deploy technology to automate tax administration. Moving on. Tax clearance. Ministry, department, or agency of government, or any commercial bank we now request for tax TCC before transacting with companies. It's not a new requirement, it has always been the requirement. Before you can transact with any government agency, you will require your tax clearance. And if you have outstanding tax, we know that you will not get your tax clearance. So that is very important. The establishment of national single window portal as a single entry port for any person involved in import, export, trade, and transit. Moving on, that has always been the case. Therefore, foreign employment, this is just the determination of whether you're in foreign employment or Nigerian employment or any other employer. So, like I said, your whether you are domiciled, you have a permanent place or habitual abode in Nigeria, that means that you are a resident in Nigeria. If your place of domicile is overseas, then that means your place of employment is overseas appropriately. So moving on, this is just for examination of residents. Offenses and penalties. Failure to register for tax. If you fail to register for tax, you are in business, you have been carrying out business, and you fail to register with the appropriate authority, there is penalty. Each penalty now The first penalty is 50,000 in the first month in which the first month that you are supposed to register with FRS. Normally, you should register with FRS. Normally, once you commence business, go and register with FRS or the relevant tax authority. Once you have commenced business, you have the obligation to register with them. So if you fail to register with the relevant tax authority, it's 50,000 in the first month, then 25,000 subsequently if the failure continues. Now, there's a penalty for awarding contract to an unregistered entity. If you award a contract to a company that is not registered for tax in Nigeria, you pay a penalty of 5 million. The company that awards such contract to an entity that is not registered in Nigeria will pay a penalty of 5 million. So you need to take note of that. Then there's penalties for refusal to file or filing inaccurate tax return. The penalty is 100,000 in the first month and 50,000 subsequently. Penalty for failure to keep record is 10,000 for individual and 50,000 for company. Move on, please. So we are now in the penalty regime. Then if you refuse to grant relevant tax authority access to technology, to deploy technology, you'll be liable to penalty as well, which is 200,000 plus 100% of the tax that is due at the prevailing rate. If you fail to withhold tax, if you recall that the withholding tax regulation 2024 did not state the penalty regime for failure to deduct withholding tax. So that has now been enshrined in the new tax administration. So it's 40% of the amount that's not deducted, just 40% administrative fee. You are not paying that amount. If it can prove to the relevant tax authority that you did not deduct that amount, you just pay 40% administrative fee. However, if you deduct and you fail to remit, the penalty and interest is still as it is, 10% penalty and interest on the compound interest appropriately. So moving on. Move on, please.
Can you see the slide?
So failure to self-account for tax, like I said earlier on, is the administrative penalty of 10% on the amount that you failed to account for, and there's the interest on that amount as well. Failure to supply requested information, 200,000 the first month and 10,000 subsequently. Failure to stamp duties, 10% of paid duty and interest at the prevailing CBN rate. False disclosure of stamp duties attract penalty of 100,000 or on conviction, any of the two or both of them. Moving on. Then if anybody fails to respond to a query within the time stated in the review, you pay 10 million for the first month and 2 million for each day that the default continues, or you can be convicted. So a fine of 20 million or imprisonment of 6 months. Then if you fail to render inaccurate returns, this is very important. If you fail to render inaccurate returns, that is for people. A lot of times you've seen a lot of clients trying to manipulate their accounts, under declaring their turnover overstating their cost. If you do that going forward, you'll be liable to a penalty of 15 million and 1% of the amount of tax which you should have paid if you went that inaccurate return. If you did not state your income appropriately, your expenses appropriately in the accounts, you'll be liable to this penalty. It's a very strict penalty regime now. Moving on, I think that should be like about the last slide. So these are the general offense. This is the last slide. So for general offenses, it attracts penalty of 1 million or conviction, imprisonment for a term not exceeding 3 years or both. So let me reiterate the fact that if you fail to file your returns, especially for those people that are vatable, if you look at tax payment as it is now, before, if you fail to file, the tax and the penalty is 25,000 for the first month of default and 5,000 subsequently. But in line with the Nigerian Tax Administration Act now, it has moved the penalty to 100,000 for each month. And now that has been reflected on tax payers already. And the funniest is that they treated it retrospectively. They treat it. So even people that have not filed their last year accounts, normally it should be the old rule that should be applicable. But if you want to
Hello, Madam Shaw, are you there, please?
of the time, it's already past one, so please let me say the question so that I can take them. Thank you.
Okay, thank you, ma'am. That was a lot of information, very helpful ones, and personally for me, very, very eye-opening. So if you have questions, you can drop them in the Q&A box, and we'll just go through the chats now to see if there are any questions on the chat. In the meantime, while we're going through the questions, please use, there's a link that I dropped earlier to give us feedback on the webinar. So, okay, so I have a question from Mahmoud Kasim, and the question says, please, my question is, WHT, what is the threshold before a company can start deducting and remitting VAT to RTA? Because I heard that small companies are not subject to deduct VAT on their sales. Can you hear me, ma'am?
So the threshold for VAT remittance is 100 million, above 100 million. Once your sales or your income for the year is above 100 million, you have the obligation to now register with FRS. You have the obligation to collect VAT and remit appropriately. But once your turnover has not reached that threshold of 100 million, you are relieved of that obligation of collecting, accounting, and remitting VAT.
Okay, thank you, ma'am. So there's a question from Daniel Banjo that says, in self-accounting for VAT, will the invoice amount from the small company be treated as VAT inclusive or exclusive?
Okay, for small company, no, it will be exclusive. Because if you're a small business, you are relieved of that obligation to account for VAT. Two things. As a small business, you will not even account for, you will not put invoice and VAT on your invoice. As a small business too, you are not under obligation for a company. I'm talking of a company now. If you're a small business, you are relieved of the business of collecting, registering, and remitting VAT. So you're not treating anything as whether exclusive or you are not charging VAT at all.
And when you say small business, you mean turnover of less than 100 million?
Yes, 100 million and less.
Okay, that makes sense. Tekana said, please, can you expand on the land and building option? Okay, I think you took that answer.
Yes, I took that, yes.
In the middle of the
yes.
presentation. Okay, Maureen says, please give details on people that do lending.
That do what?
Lending. I think that means like lending business.
What kind of lending?
Okay, Maureen, can
you give financial institution or what?
I mean, that's what I think it is, but I think you can answer the question based on financial institutions while
Okay. So
while
for if you're
she
in financial
updates it.
institution, the only obligation you have is to withhold fee, because for financial institution, most of the time, when you, especially for when you lend to people, no, there's no VAT. When you do lending, there's no VAT implication. Normally for securities, interest income is not vatable.
Okay, thank you.
So if you're into if you're a finance, unless you have fees, because there's difference between when you have interest income and you earn fees. Your fees is vatable. But if it's just interest income, it's not vatable. But however, maybe for withholding tax, if you lend to people, by the time they are paying you interest, because what you'll be earning now is your finance income. By the time those people that you have lent to are paying interest, they have the obligation to withhold tax from your fee.
Okay. Another question from Mahmoud says, please, which section on the NTA and NTA relate to the VAT exception on land and rent?
No, you see that in the schedule to the Act, to the Nigeria Tax Act.
Okay, so it's in the schedule to the Nigerian Tax Act. Okay. Hope the recorded version of the presentation will be shared. Yes, the recorded version will be shared. Please, can you explain how an NGO or a development organization exempted from tax but paid an input VAT on some transactions, most especially transaction over the counter, and there is no output VAT? How will input VAT be claimed?
Normally for NGOs, not government, you are not even supposed to pay VAT, because you are because you are an exempt because you are, yes. That means at the end of the day, you cannot claim your input, you cannot claim input VAT. It is only you will pay your at the end of the day, because you will not be liable to charge, because you're an NGO, you are not supposed to make income, so you will not charge VAT on your invoice. However, when maybe people are rendering service to you, they will want to charge you VAT. But now I think that has been moved, you have been moved to zero. So you just claim a refund from NRS. Just compile all your invoices, so that at the end of the year, then you can now claim a refund from NRS appropriately.
All right, thank you. We'll be recording the shared. Yes, already answered that. Okay. Good afternoon. With the slides be shared. Okay. Please, Adebukola says, please confirm if small companies with turnover less than 100 million in the service industry are required to charge VAT.
Sorry, I didn't get that.
If a small company with turnover less than 100 million in the service industry, you're not required to charge.
You're not once your turnover is
okay. When is the filing date for individuals? Also, explain when to use LIRS and FIRS.
Okay, the filing date for individual is 31st of March. Following the year of assessment, 31st of March, you must file all your returns, whether employment, investing, and all that. Then the difference is for FRS, that's FRS, sorry, it's not NRS, that is Nigerian Revenue Service. So any transactions that has to do with companies, whether VAT, if you told VAT from corporate organization, that goes to NRS. But for LRS, it deals with individuals, strictly individuals, and business, ventures, enterprise, or any other relevant services. So the difference is for NRS and every other internal revenue, it deals majorly with business. You as an individual, you are transacting with business ventures and others. So whatever remittance you are making to LRS or relevant. For FIs, deals strictly with corporate organization, remittance from corporate organization, whether VAT or remittance from withholding tax that you have deducted from companies. So that's different.
Okay. So how should an individual file tax? That sounds like a very wide question.
Okay, so you have to log into LRS website. If you're in Lagos, log into the website, eTax, LIM. So you will see it's there. You see the way to file your tax there.
Okay, the LRS website. Okay. How do you categorize monthly bank charges like account maintenance and others, which captures both taxable and not taxable transactions like school fees and others, how do you recover the cumulative cost of the non-taxable transaction?
I don't understand that question.
So saying that there are some payments that are made from your bank account that are a mix of taxable and non-taxable transactions. So if they say maintenance cost, for example, for your bank
Maybe
account.
the person can get back to me. I don't even understand that question. Maybe the person will have to provide clarity, more information on that.
Okay. Okay, Joseph Matthew says, how do we file for annual tax in relation to personal income mark for an employee returns annual? Okay, I'm trying to be clear. How do we file for annual tax in relation to personal income mark for an employee returns? And okay, I don't think you completed that question. Could you please type it again, Joseph? Please type that question again so that it can be easy to understand. Okay, Kemini says, for business names who were made to register for VAT before and file even when not collecting VAT, with this new rule, do these small companies still have to file for VAT?
No, I just stated that let me section 22 of the Act, you are relieved of that obligation.
Okay, so someone says, please give short explanation on WHT receipts to vendors and suppliers.
WHT receipts to who?
Vendors and suppliers.
Receipt or deduction?
Yeah, receipts. It says the question says receipts.
I don't understand.
Okay, please can you give us that
Okay,
question
let me
again?
and maybe the person should reframe that, but let me just give like
Reframe.
a general. I want to assume that it's just asking for the WHT implication of vendors. So normally,
Okay.
when you have a vendor and they have issued the invoice, if the vendor is a small business, if you are sure that it's a small business, there's no WHT, you must not withhold tax from them. You know, like I said that any company whose turnover is less than or not more than 100 million is exempt from tax. Is exempt from company tax. So normally, withholding tax is advance payment of tax. So you cannot withhold from such transactions. So for companies who are small business that turnover, you are sure, you have to be sure as a company that this is a small business, you cannot withhold tax from them. But for the big companies whose turnover is more than 100, you withhold tax from them and pay to the relative tax authority. If it's an individual or maybe a business name, you pay to maybe LRS or relevant state authority. If the company is a limited company, you pay to FRS.
Okay, thank you. So there's another question that says, can you talk more about foreign employees and how they can manage or file their tax, like those who work remotely? So they work for foreign companies but live in Nigeria.
Yes, it'll be subject to tax.
Okay, just like any other employee.
Yeah.
Okay. Okay, so what happens if your turnover fluctuates? Sometimes 100 million, sometimes lower. Does it mean that when it is 100 million, you charge VAT and below, you don't charge?
Yes. If your turnover, once you reach that 100 million threshold, maybe if your turnover is still at 99,900,000, there's no VAT, you don't charge VAT. But once it's now 100 million and one, then you charge VAT. On that, and that is the point when you will start charging VAT. So any sales you make or any service you render after you have attained that 100 million, you start charging VAT. Then that means you have to register for FRS. Then you start charging VAT. Then you start remittance.
Okay, thank you. Charles said, what are corporates, such as trade associations, cooperatives?
Oh, sorry, your line is breaking.
Is it better now?
Yes, better.
Okay. I said, what are the considerations for not-for-profits, such as trade associations or cooperative societies?
What are the considerations for all? For non-for-profits?
Not-for-profit NGOs.
Yes, they're exempt from tax.
They're exempt
If you
completely.
look at it's part,
Okay.
if you look at this, it's part of those that has tax incentive, they're exempt on tax.
Okay.
Because
Okay,
normally
then
they're not
Ade,
supposed to. Normally, hold on, let me just put clarity to that. Normally,
okay.
they're not supposed to make profits. Once they're into business and they make profit, that profit that they have made is the same as if they are trading, will be subject to tax. But if it is within their normal, the object clauses to have a not-for-profit, maybe a cooperative, then that will not whatever income, because normally they can give them with income and all that. But if they are trading, then whatever they have made, the profits from that trading will be subject to tax. But normally they're not subject to tax. They're exempt.
Okay. All right. There's a question that says, after paying land use charge, is an individual still required to pay tax on rental income from the properties on which land use charge has been paid?
Yes, because income is an income. Your land use charge is an expense.
Mm. Okay. There's a question that says, is the money sent into my account after my employer already remits my payee still taxable?
No, it's not. However, if you invest that money and you earn interest, that interest is still subject
It's
to
taxable.
tax. Yes.
Okay. Are we expected to deduct WHT on contract staff or contractor? Please differentiate
No.
between contract.
Okay. Let me.
The second part is, please differentiate between contract staff, temporary staff, and contractor.
Okay. The first question, you are not supposed to withhold WHT from the contract staff salary, no. But however, all these contractors, all these because normally it's more of outsourcing. They will always charge you a fee, more like an admin fee, for providing that service to you. So the withholding tax will be on that admin fee, not on the salary for that. So now you said we should differentiate between what?
Contract staff, temporary staff, and contractor.
Okay, so for me, contract staff and temporary staff. Contract staff majorly are those people that normally depends at source. They outsource staff. So, and I've told you the treatment. You don't withhold tax on their salary, but on the admin fee. Therefore, temporary staff, most of the time, maybe coppers, and for coppers, there's no tax. There's no tax on copper fee, the government fee. At times you get coppers and you still pay them, stipends and all that. All those kind of fees is subject to tax. But the fee they earn from the government itself, that allowance, that youth service allowance is not subject to that. So all those corpers, all those IT staffs, they are temporary staff most of the time in each organization. Therefore, the contractors, those was maybe your vendors and all that. Those are your contractors. So you just withhold tax from them.
Okay, thank you, ma'am. This question says, please confirm the tax situation of people who are employed by organizations outside Nigeria. I think we've already talked about that. We've talked about remote workers. So they are still just as liable to tax like every other employee. Okay. So this Samuel says, I'm currently in 300 level studying natural science. My question is, do you see the new PIT structure influencing long-term household financial planning behaviors, particularly savings and retirement contributions?
Sorry, can you take that again?
So he says the new personal income tax structure, do you see it influencing long-term household financial planning behaviors, particularly savings and retirement contributions?
Okay. For me, if you look at this new finance, nothing has changed. But the only thing is that for me, if you fall in the area of savings, yes, for the low income earner, it might, because we found out that if you look at the computations, for those people that earn less than 9 million, there's a bit of reduction in their tax, not very significant. any company that has taxable income that is no more than 9 million, you see a bit of reduction in that tax. So majorly when there is reduction in maybe tax, that means the taxable, that means the income will increase, the taxable income, sorry, that means the income will increase, that means the tax is low. So it depends on the individual. You can decide to save more and you can decide to spend your saving. Do you understand? So some people that are conservative, they can decide to save. And for people that they will just see it as, oh, there's additional money to spend. So it depends. But for those people that earn high income earner, they will pay more tax. So that can actually affect savings on the long run.
Okay. Thank you. I have a registered business name. Do I pay personal income tax as a business or as an individual?
Okay, for those people that has a business name, you are paying as an individual. But you are bringing in your profit, all the profit from your business, you are paying it because now it's profit you are paying. You're not paying based on income. You know, for people that doesn't have business, you are paying tax on your income. Especially for those in employment, you have employment income, you have investment income, and all that, every other source of income. You are paying tax on your income. But for business owner, you are paying tax on your profit because as a business owner, aside from the fact that you are earning income, you are incurring expenses. Do you understand? So it is when you make profit from that business, that is when you be subject to tax on your profits for a business owner.
Okay, thank you. Okay, so
But it's going to be in your name because you are, most of the time for business owner, it's a sole proprietorship.
okay, so another question says, will money market investments be taxed? Also, if I liquidate the investment, is that income taxable?
No. So if you liquidate your investment, that principal amount will not be taxable. But whatever interest that's accrued on that principal amount will be subject to tax. However, normally when you earn interest income, there's withholding tax at 10%. Whatever that withholding tax is not a finite tax. So whatever withholding tax that you have suffered will be relieved from whatever you're supposed to pay at the end of the day.
Okay, thank you. Can we claim input VAT on all expenses apart from cost of sales and fixed assets?
You can claim input VAT on your cost of sales and fixed assets alone. Every other administrative, because normally, even before now, you claim input VAT on your purchase. For those people that are into manufacturing, you claim input on your purchase. So the same way. So for those in the service industry now, you claim input VAT on your direct cost. Then for cost of purchasing your fixed assets, not on your normal admin expense.
Okay. For individuals rendering a service locally and abroad who are compensated or supported through paid airfare tickets, per diems, stipends in this etc., are they taxable?
Sorry, I didn't get that. Who are supported through what?
Who are compensated or supported through paid airfare tickets, stipends,
Okay.
per diems, are these taxable?
Okay. If your paid air ticket is for business purpose, it's not. But if it's for personal, if you're a Nigerian employee, it can be seen as a benefit in kind to you.
Okay.
But if it's for business purpose, not that.
Okay. Also, how and where can we find a person's tax ID? I think we've talked about it.
Where? Okay, you can log into the Joint Tax Board, and there's a portal now. The Joint Tax Board has created a portal, but your NIN will be required. So you can get your GTB PID number from them.
Okay. This one says, I'm not an employee of any organization and I don't own a business. I make money through offering consultancy services to different clients. I offer services as an individual, not as a company. What taxes am I obligated to pay? How do I calculate them? And how should I pay?
Okay, in essence, you're a business person, just that you're not registered.
Mm-hmm.
Do you understand? You're actually a business person. You offer consultancy service. So for me, I would advise, because whatever you should be taxed on should be your profit. because whatever you're offering, you should have expense so that you will incur in providing those services. So majorly is your profit because you are actually a business person. If you don't want to register as a business person, then that means you want to be subject to tax or your income
Mm.
from rendering those services.
Okay. Does saving put in bank, money market, share declared while taxing for individual or enterprise? Okay, I don't think this question was completed. Jamil, please rewrite your question. You didn't write it completely. Okay, Dr. Ebenezer says, how will the principal or the other party know that the other company is a small company? Someone that
Yes,
does not have access.
I'm very happy with that person because I've been expecting that question. So the truth is that most of the time you might not know, but because you've been having business dealing most of the time, if it's a client that you have business dealing with, you may know or you may not. But for me, what we tell our clients is that ask for their audited account financial statement. Ask for it. Now, in line with the new the new act, every company for small business, they may not have to go through the rigors of preparing full audited account. So they can prepare like a simplifier. If is going to come out with a policy statement of that on how to prepare their account. But for me, I've been telling my clients, ask for their audited account so that we'll be sure that, because when FIS come, by the time they say that you're not withholding tax from, they want to know, how do you know that they're small business? So just demand for their audited financial statement or their tax clearance. Because if they're small business, they have the obligation to, because if you're a small business and you don't file your return, you will not enjoy that exemption.
Okay.
You must fulfill all compliance process. You must file. Hello.
Please go ahead. Go ahead, ma'am.
Okay, I said that if you're a small business and you are not fulfilling your compliance and process, you must fulfill all you must register with FRS as a small business, whether you're small or not, you must still register with FRS as a corporate person. Because this exemption is just for corporate entities, not for individuals. You must register with FRS as a corporate person. You will have your TIN number and you will file appropriately. If you don't satisfy all this compliance obligation, you will not enjoy that exemption. So now for me, if you are filing your returns, that means at the end of each year, you get your tax clearance certificate. Your turnover will be there on the tax clearance. So any company that is having, if a vendor is coming to and they are claiming their small business, is either they give you their tax clearance. Their tax clearance is even the most important one to be sure that they are registered. Tell them, give us your tax clearance. At least on the face of the tax clearance, you will see that, because somebody, if they are small business, they will not have issue getting tax clearance. So it's there you get your cloud. For me, I prefer the tax clearance, or you ask for the audited financial statement as a record.
Okay, is WHT applicable to a company who supplies oil and gas products, especially small business?
Yes, whether you are supplying oil and gas, just WHT. But if you're a small business, if your turnover is not more than 100 million, if you are a limited company, not a business thing, not an individual, you will not be liable to WHA because you are exempt from tax, company income tax.
Okay. So there's a question that says, for a Nigerian company, if your contract states that all taxes are deducted at source, do you still need to file? What is required to support your filing, if yes?
Yes, we'll have to file.
You still have to file.
You have to file because the truth is that withholding tax in fact, not just for, except for non-resident company. That is when your withholding tax deduction is the final tax. For a Nigerian resident company, your withholding tax is not your final tax. So you still need to file and you pay additional tax. Unless your withholding tax can cover the tax that will be paid by you. But you still have to file.
Okay, great. Adebola says, is the 100 million a cumulative threshold for a small business or an annual threshold?
Annual.
This is annual, okay. Peterson says, for a software company making purchases from a foreign company using card payment, for instance, purchasing a monthly subscription license, how can we withhold tax?
Okay,
Are we meant
I
to
like that
withhold
question because I'm
and
expecting that
remit
question.
tax on NRS or on behalf of the company?
I expect that question because we see that a lot with our clients. So most of the time for POS transactions, there's no way you can withhold tax. There's no way. So most of the time, especially when FIs, when they come around, they put face to what they are doing because there's no way you can withhold tax from such. Because the truth is you are using your card and ₦1, if the amount you want to pay is less ₦1, it will not, that transaction will not go. So there's no way you can withhold tax. But however, what I used to advise my clients is that, okay, no withholding tax, save account for the VAT. You know, we spoke about save accounting for VAT because now on that invoice that they're giving to you, there's no VAT on it. Once FIs have seen that, okay, you have done your bits by accounting for the VAT, most of them, they just waive the withholding tax. Although there's no law that says that, but in reality, most of the time they put face to it that, okay, there's no way you can withhold VAT. But if you don't pay the VAT, then there may be issue. So you have to send account for the VAT.
All right. So we have a question that says, can we please get a format on how we can file on personal income tax annually? Something like a guideline.
If you need my service in that regard, then you have to contact me.
Okay. Please say something about the VAT deducted from commercial paper and money market fund investment of individuals who is not even supposed to pay CIT at all. Can an individual? Can you
I
hear
didn't
me?
get that question. I didn't get
So
that
it
question.
says,
The call came in.
please say something about WHT deducted from commercial papers and money market fund investments of an individual who is not even supposed to pay CIT at all. Can an individual claim refund? Even most of the fund managers don't even provide WHT credit.
Okay. Okay, for individual, if you have money market fund and you earn interest, like I said, normally your fund manager is under obligation to withhold tax at 10%. But most of the time, it depends on your income. If your income, it is only for individual, it is only 800,000 that is tax-free. So if the income you have made from that investment, from the interest that's accrued, is less than 800,000, then that means you don't have to pay for that tax, but you still have to declare that this is the only income you have made and it's lesser. But if the income you have made from that investment is more than 800,000, you have to do the normal tax because after the 800,000, you agree that the next bandwidth is 15%. Whereas for WHT, whatever you are paying, the tax on it is just 10%. So you still have 5% to pay. So they are not talking of refund now. The only challenge is that normally for FRS, because you're an individual, you can even get your return tax credit notes. You can, because normally they are under obligation to provide a schedule of the withhold of the customers that has those WDT that's been. So you can go to LRS and just get your withholding tax credit notes. Maybe you have to contact your fund manager, let them give you the schedule. You can go that way so that you can get your withholding tax credit notes. Where can you see to set some of your liability at the end of it? Because it's advanced tax for you.
Okay. Is allowances paid to an employee taxable? Apart from deducting tax on the salary, is allowances meant to be tax deductible also?
Yes, yes. In line with section 4 of that act, any fee allowances is tax deductible as well. It's an income to you.
It's taxable.
Yeah.
It's nearly 2 o'clock, so we'll just take a few questions
I have just
and
6 more
close
minutes.
the. Okay. Could you please confirm if the VAT is to be deducted on the transaction or purchase of inventories like tomatoes, shawarma, and the likes of a quick service restaurant?
No, even individuals are not liable to withhold WHT for you. No, they cannot.
Okay. If an NGO award there for free, can the NGO? Are you there?
Well, yes, I didn't get that, so I didn't hear you.
Okay. It
Hello?
says if an
You are breaking.
Hello?
Hello.
Can
I didn't get that, so I didn't get your question.
about now? Is it better?
Okay.
An NGO awards a contract to print books to be distributed for free. Can the NGO VAT?
You said if an NGO do what?
Awards a contract to print
Okay.
books that is meant to be
Okay.
distributed for free. Can the
Okay.
NGO charge VAT?
No, you're not of the obligation to charge VAT as an NGO.
Exactly. Okay. So there's so many questions left. Okay.
Because you know VAT is, you should understand that VAT is on sales. You are an NGO, you're not selling. That's an expense to you, so you cannot charge VAT. Unless you want to ask me, if maybe the person is trying to ask that, can they charge the NGO VAT? Maybe what the person, that should be the question. But the NGO is an organization. VAT is on service that you are providing. So you are getting an invoice for printing books, or is the NGO the one that is printing? I don't understand. I don't understand the question.
So you give a contract. So I own
Yeah,
an
you gave
NGO.
You are an
And I
NGO,
gave
you
the
gave out a
contract, print
contract.
books.
So
Yes.
you cannot charge them VAT
You
because
can
it's not a
charge
sales
VAT.
to you. No, it's
Okay.
not an income to you. You are spending.
Okay. So I'll just take one more question. Are we paying tax on properties we sell? Say I sell my old pressing iron. Will the money retrieved be taxed?
Sorry, I didn't get that.
So my assets, if you sell an asset, an
Okay.
old asset, this person is saying, for example, old pressing iron in my house, I sell it. Will the
Okay.
money received be taxed?
Okay, if you said that is disposed, you said an asset. So now that is in line with capital gains tax. When you sell your personal chattels and it's less than 5 million, the worth is less than 5 million, is exempt from capital gains tax. But if it's more than 5 million, it will be subject to capital gains tax. When you dispose of an asset, because your iron, you said iron, right?
Yes.
Iron is an asset. You see some people, they dispose of their furniture. It's an asset to them because they are not in the, it's a capital item. It's not, they are not, that's not the business they do. If they're in the business of selling iron, then that is sales to them. It will be treated as income. But now it's a disposal of their assets. So because it's personal chattel to them, if it's less than, if the value of that disposal, the consideration is less than 5 million, whatever, there will not be capital gain tax. But if it's more than that, then capital gain tax will apply. Or the chargeable gain.
Okay, thank you very much, ma'am. We've taken so many questions, and it's nearly
2
2
more
o'clock already.
minutes.
Okay, let's take another question. How would a market man or woman in Balogun or Oshodi get to file their tax? I mean, those unstructured businesses.
In fact, I told you that I believe LRS, they will come out with a policy statement. Normally, what they do is that, you have LRS going about all these markets. They pay small amount of money annually. At times, I think, depending on the business, 5,000, 10,000. So I know the LRS will come up with a policy statement. I believe every other relevant tax authority will come, because now the informal sector, that's where the money lies, not even from employees like us. So I know that they're going to do something. Maybe they will still continue with what they're doing presently, or maybe they might decide to, because normally their business, or normally they're supposed to prepare and charge tax on their profit. So let's just wait for them. But presently they pay tax, but no, it's very minimal. So maybe they will still continue with that. It's possible.
Okay. All right. Thank you, Madam Shewa. It's a minute to 2. Maybe we can just take one more question.
No, I saw a question. The person is asking that, does CG take into consideration inflation? Unfortunately, no, in Nigeria. In other climes, like in UK, you see indexation allowance that takes care of inflation. But in Nigeria, this Nigeria, no, sir.
It doesn't work that way. Okay, thank you, ma'am, for your time. Thank you for joining us, and thank you to everyone that came for this webinar. We hope you've learned a thing or two. The video is available. It will be shared to everyone with the email that they use to register. Thank you so much for your time, and I believe this brings us to the end of this webinar. We'll reach out to you. Hopefully, you also completed the link that was shared for feedback, and that will help us bring you even better topics for webinars going forward. Thank you very much. And Madam Shawa, thank you also very much for your time. Enjoy the rest of your day.
I'd like to say a very big thank you to all the audience. I will not be able to feed the link. Okay. A very big thank you. Like I said, you can get in touch with us. Triple K and Associates. Their office is at Allen Avenue, 14 Bola Ajibola. And my phone, I can drop my phone number in case you need further clarity or our professional service will be available to help you. Thank you.
All right. Thank you, madam. Okay. Thanks, everyone, and enjoy the rest of your day. Bye-bye.